All right, welcome everybody once again. And my topic for the day is how to create generational wealth from the stock market. So, I have been a trader for the last 9 years. I failed for the first 5 years of my life, lost a shit ton of money, wasted a lot of time, and then eventually figured out that stock market is a place, it's a factory of money. You can make a lot of money provided you're doing the right thing at the right time with the right expectation. So today, with 9 years of trading experience, I started my own company trying to simplify trading and investing for everybody because I know trading, investing, finance, it's very complicated. We try to make things fancy, and at the end of the day, no one really knows what's going to happen tomorrow in the markets. So what I've tried to do is that I'm trying to give you a solution and a vision on how can you create generational wealth from the stock markets, and how whatever I've learned in my entire 9 or 10 years of trading experience, I've just understood that if you want to make a lot of money and if you want to truly create wealth, stock markets are the way to go. But in India, there are some interesting facts that I'm going to tell you. In India, less than 5% of the population invests in the stock markets. If you compare this number to China, where 56% of population invests in the stock markets, and compared to America, where about 74% people invest in the markets, India has not even seen the stock markets. Indians have not even seen wealth creation journey to start from the market. So it's really important for you all, and I think for everybody, to really understand how to really create generational wealth, because a lot of people invest in the markets but they don't end up making money. Like, they don't end up creating the wealth that I'm talking about, because I am talking about a lot of money. So let's get started and let's try to first understand what is the difference between income and wealth. Now, this is where the game starts. Income is something that you get periodically, right? Your salary, maybe your professional fees, or anything that you do by trading in your time, right? So you give time and then salary gets credited into your bank account. So income is something which is going to take care of your expenses, it's going to take care of your lifestyle, etc. And then there's a very simple formula which I think everyone knows, that income minus expenses is equal to savings. And mind you, 95% of all human beings fail to understand this one simple formula. And I'll prove it to you. Because human beings are lazy, they're stupid, and they want everything, but they don't want to do anything. And that is exactly what I'm trying to prove it to you, on how a simple process and simple understanding as students of business, you guys can literally accelerate your financial wealth by at least 15 to 20 years by just being smart, right? You don't really have to go to the biggest investment banks of the country, you just have to be a little smart. On the contrary, wealth is an accumulation of income, and wealth is created by putting your savings in the right place. Now, income can get you all of this. The screen is gone, I think. Okay. So income can basically get you your iPhones, it can get you branded stuff, and income is basically going to get you everything that you want right here, right now. And all of these expenses, mind you, are not taking you anywhere. On the contrary, wealth can get you stuff which is serious money. So if I talk about an iPhone or good shoes or a pair of good belts, anyone can have it. Any bloody person can have it in the world. But 10 years down the line, would everyone have the money to buy a house, or maybe a good car, or maybe establish themselves for their next 20, 30 years, maybe the retirement? That is the difference. On if you're smart with your money in your 20s, you're going to be really, really ahead of everyone in your 40s. So let's try to understand this from a mathematical perspective. So income minus expenses are savings. Now, income is a function of your skill, your knowledge, time, and the profession that you are in. So if you're a doctor, if you're a lawyer, if you're a MBA in finance, or if you're a CA, your income is going to depend on a lot of factors which you may not have full control of. That means you have partial control on your income. Now, let's come to the second part of the equation, which is expenses. Expenses are a function of your choices, and you have full control of your expenses. That means If you can reduce your expenses and your income stays constant, you're going to save more money. And why is saving important? Because savings is where your multiplication effect of your wealth is going to start. Indians are horrible savers. This is a study conducted by Times of India in 2021. 75% of all working professionals making less than 1 lakh rupees a month do not have money left after 20th of the month. It's a very shocking fact. People are going to buy iPhones on EMIs, cars on EMIs, every single thing is on EMI, every single thing is on credit. That means for you to take control of your finances and for you to take control and really create wealth, you need to have this savings component. And you can do two things with savings. You can invest to multiply or you can keep to destroy it. Now, even if you decide to invest your money, where do you do it? You do it in a place called the stock market or the factory of money. This is a place where money is manufactured every single day in every country for everybody, but only a few actually make money from it. Why? Because people try to take stock markets or the financial markets for that matter very lightly. And I am here to give you some serious answers to a few questions that you might have. If you decide to invest your money, and this is going to define how you approach the markets from today onwards, that is my guarantee to you. If you decide to invest your money, you can either reduce your existing wealth, you can maintain your existing wealth, or you can create exponential wealth. Now, majority of Indians are doing the first thing. They're putting their money into fixed deposits, which is going to yield them 7-8%. They're going to feel safe. They're going to feel happy. 10 years down the line, you're not going to be able to buy something that you can buy today with, let's say, 1 lakh rupees after 10 years. Why? Because the silent killer inflation is killing your money. Now, a lot of people have this misconception that inflation is 5%, 6%. This is the inflation for tomatoes, onions, and cauliflower, which you and me will never even go and buy. The real inflation is lifestyle inflation. The iPhone that you bought last year, today it's 20% expensive. The flight that you traveled in, the hotel that you went in, the cup of coffee from Starbucks, everything is going up by an average of 15%. So for me, I feel real inflation is 15%. So your money has to compound faster than 15% for you to stay where you are today. So banks or fixed deposits are clearly not taking you anywhere. It's going to basically reduce your existing wealth. Now, if you are doing mutual funds, sahi hai, you are not really doing a great job, my friend. I mean, this is a very contrary opinion. You are going to invest your money in mutual funds. They are going to create wealth for you, but you're still maintaining your existing wealth. You're not really doing wonders. And the last thing, which is a question mark, you invest here and you create exponential wealth. This is where you literally skyrocket your journey of personal finances. Now, 1 lakh rupees invested for 10 years in a bank FD is going to basically yield you 1.96 lakhs after 10 years. Mutual funds are going to give you some 6 lakhs. And the secret thing that I'm going to be talking about in the next few minutes is going to yield you 20 lakhs. So now, if you see the difference of choices, a single choice of playing safe when you had the opportunity to take risk. You guys are 20-year-old, right? 20, 21, 22, maybe 20, maybe 25. You guys have 30 years of investable age left. Take risk. If you're not going to take risk today, you will be forced to take risk when you can't afford to. I can see a lot of 50, 60-year-olds trying to now get into futures and options. They want to take risk now. I mean, it's too late, right? So it's the right time for you to understand that there is some investment style. There is some way where you can be bloody smart with your money and accelerate your multiplication rate. You can literally take the power of compounding in your hands. Now, how do you do that? Small cap and mid cap investing. Now, this is one of the most underrated things, and let me just quickly explain in 30 seconds of what small caps and mid caps really are. So you can see three companies over there. One is TBZ. All three are jewelry companies. Number two is Kalyan and number three is Tanishq. So I'll just quickly ask, have you heard about TBZ ever in your life? Please raise your hand. Have you heard about Kalyan Jewelers ever in your life? Please raise your hand. Have you heard about Tanishq? Please raise your hand. I think everybody, right? So TBZ is a small cap company. They are worth about 900 crores. Kalyan Jewelers is worth about 30 to 40,000 crores. It's called a mid cap, meaning this company is in its stage of growth. It has proven some growth elements and now a lot of growth is still left. And then Titan or Tanishq is where they have already captured every single piece of growth possible on the planet Earth and now they are ready to conquer and expand. Majority of Indians are going to invest in Titan. But the party is over. Titan has created wealth for people who thought Titan would be Titan today, 15 years back. You in the markets are not going to get rewarded for the past. You're going to get rewarded when you take risk for what is about to happen in the future. Let's look at the return comparison of all of these three names. In the last 1 year, from January 2023 till December 4th, 2023, Titan has generated a return of about 36%. Kalyan has given a 167% return and TBZ has given somewhere close to a 61% return. What does that mean? TBZ and Kalyan are going to grow faster than Titan. They are more riskier than Titan and hence you're going to get rewarded by Titan. Now, if you look at the maximum tenure of all these three stocks, it will blow your mind. Titan has generated 81,750% returns for people who had put in money in the year 2000 when Tanishq was not even born. Titan was only selling watches and only in 2005 is where they invested and they started Tanishq or a jewelry brand because they understood one very simple thing. Indians are getting richer, Indians are making more money, gold is very important, simple stuff. So the point over here is, if you're going to invest in Titan today, and if you expect yourself to create generational wealth, I am so sorry, that's not happening. You have to invest in Titan, you have to invest in stocks which have done historically well, but your major chunk of wealth is not going to come from these stocks. Do you agree? Please raise your hand. The stocks which have completed their journey of growth, if as students of finance and as Gen Z, if we are going to invest in those old stale companies, they might be good, they might even make you money. But for you to 100x your money, you need to find the next Titan, and that is what we're going to be discussing in the next couple of minutes. Now, this is Indian Janata ke favorite stocks, right? So, if you ask anybody on the planet, which stocks have you invested in, you will see these names: Reliance, Tata Motors, ICICI Bank, Infosys, Bajaj Finance. Do you agree with me? Please raise your hand. These are the stocks that you would probably go open your Zerodha Grow Demat account. 1 lakh invested in these stocks for 5 years would yield you 2 lakhs, 4 lakhs to and around somewhere between 2.5 lakhs on an average. The so-called blue chips. These companies are again at a maturity stage. They have done what they wanted to. Now, this is 90% of Indian investors. 90% Indian investors are going to have these stocks in their portfolio. So what are the other 10% doing? Let's compare. These are the Indian VIPs, people who know how the market works. Money, 1 lakh rupees invested for 5 years in these 5 stocks, 88 lakhs in Vari Renewable Energy. What is the theme here? Renewable energy. Did you not know 5 years back that clean energy and renewable energy is the future? Did you not know that? We did. Did we take action? No. Now you see X-Pro India, you see PG Electroplast. So all of these companies are just starting off their growth journey, and 1 lakh invested in either of these 5 or 6 companies, and there is a long list of about 50 companies who've created exponential wealth. Just compare yourself. You invest 1 lakh rupees in Reliance, after 5 years you're left with 2 lakhs. After 5 years, your iPhone is not going to come in 2 lakhs. But if you just research a little and just be a little smart about your money, you can exponentially increase your wealth to maybe any of these numbers. Let's take an average of 40 lakhs. So you're basically multiplying your money by 40 times in 5 years by investing in companies which are nothing today, but they're going to become the Titans, the Reliance, and the Bajaj of the world after 5 years. So what do you have to do? You have to research. You have to understand how India is growing. We are in India's golden era. The next 2 decades are for India. And this is a list of 5 stocks. I guarantee in the next 5 years, we will have a list of over 1,000 stocks which have created such wealth. But if you are still stuck to mutual funds, fixed deposits, savings account, all of that jazz, you are not going to create exponential wealth. I again come back to the same place. The stock markets are a factory for you to multiply your money. Now, in this factory, if you go in the safe direction, you're going to make money, you're going to maintain your lifestyle, but you're not going to get wealthy. I am talking about you being filthy rich. For you to be filthy rich, you have to do things differently. So how many of you are risk takers from the statistics that you've seen now? I'm not saying put your own house at risk, but I'm saying let's just risk some amount of your investable capital in trying to multiply and compound it. Let's take a case study, and this is where I break down the framework of how do you identify such companies. This is a company called Serra Sanitary Ware. Have you heard about this company? So they basically have these wash basins, sinks, and basically washroom stuff, right? So the theme was hygiene. In 2006, there's an investor named Mr. Vijay Kedia. He invested thinking just very once. See, his rationale to invest in this company was very simple. Indians are going to be more hygienic in life. And he thought that we all had these Indian WCs. How many of you have seen old houses with Indian WCs? That transition had to happen, and he had a very simple formula. This company could basically take advantage of that. So the theme is hygiene, the sector was sanitary ware, and the product type was mass market brand, very cheap stuff, right? Which India could consume. 1 lakh rupees invested in 2011 is rupees 2.4 crores in 2024. This is what you call exponential advancement in your wealth. You did not do anything except buying that. The factory was run by the founders, the promoters. Everything else was done automatically. You are a king, you are an emperor if you invested in this company and took advantage of this entire creation of wealth. So how do you really understand whether a particular company that you are researching or the mid-cap, small-cap investing that I'm talking about, how can you really get into that? You just look at their numbers, and if you look at these 3 numbers, I'll share the slides with you later. The sales, the margins, and the profits. This is what is the language a company communicates to an investor, and it's your responsibility to have a look at these numbers periodically for companies that you're scouting. So Serra was basically one of the examples where 17,000% returns were generated for investors. Titan is another example, and there are so many other examples which can create generational wealth for you. So how do you really create generational wealth? That's the question. Number 1, invest in the future, not the past. Don't be an ordinary person. Go beyond, right? Try to find which other new sectors. I'll give you some names, right? India is very dirty. How many of you agree? India is very dirty. India needs a lot of waste management. That's going to be the future. India has a lot of infrastructural problems. Just look at your Bangalore roads, right? A lot of potholes here and there. India needs an infrastructure revamp. India needs a lot of luxury consumption. All of these are the themes for the future, and it's your responsibility to figure out which companies will ultimately dominate. So invest in mid caps and small caps. Don't just invest in every other company that your friend, your family members are investing in. Number 2, research, think, and go beyond. Put your Google Baba to work and find these hidden gems. There are structured ways in which you can do that. On the internet, you'll find it. You can connect with me offline and I'll help you do that. The theme, the industry, and the earnings, TIE. These are the three major elements which will enable you to invest in companies that can literally explode your wallet. Number 3, and this is the last one. Take action quickly, you are already very late. A lot of Indians are investing probably post 26, 27 years of age. You're very late, very, very late. 7 years of compounding is as good as 20 years of a person working for a company with a 15% increase every year. So you have to take action and you have to take it today. So I would like to conclude by saying one very simple thing. Many people are in the dark when it comes to what to do with money. They're very shy. I don't know what to do. They are confused. And today, I hope I've turned on the lights and sparked your vision or your hunger to create generational wealth. Thank you.